Now, you know, in business, cash budget is very important because business, if you're doing business and you do not know how to manage your cash flow, you're going to run into trouble. So that's why we always talk about working capital management. And when we talk about working capital management, we always talk about budgeting. So that's how important it is in terms of cash flow and cash budget. So whenever we do cash budget, the key thing is you must know how to identify when will your money come in and when will the money go out, because we follow your cash flow. Okay, now we follow cash flow. Okay, so you must follow exactly. Example, if you tell me you have to make payment end of the month, that means if let's say I pay salary end of the month, then the salary for the month of April you will pay on 30th of April. 30th of April is still April, you know. It's not May, you know. Some people say, yeah, 1 day only, right? No, it's not 1 day. It is in April. Even though you say it's 30th of April, it is 30th of April. The bank will send you a statement for all the transaction until 30th of April. You cannot make payment 1st of May and say it's the same. It's not the same. I know you might say it's just 1 day different, but it's not the same. So we have to follow exactly the timing. If this is for April, then it's for April. Okay, now we look at the example and then we discuss this together. The requirement here is to prepare the monthly cash budget for Galvani Limited from the month of January to March 2020 X4. Galvani Limited budgeted to make sales of 50,000, 66,000, 80,000 in the first 3 months of 20X4. 50% of the sales are for cash. The balance 50% will be paid in the month following the sales. Now, I know some student, when your English is not very good, you get a bit worried. Okay, so remember, the month following, that means the month after lah. So if let's say you have a sales in the month of November, then you will get the money in the month after November. That means in October, December. Okay, it doesn't matter if you sell for example 1st of November, then you should be getting 1st of December lah. So if you say I sell 19th of November, then you should be getting 19th of December. So it's always the same month. So it really doesn't matter, because sometimes students say, so what if I sell the last day of November? It's okay, you sell last day of November, you will get the money last day of December. It's still in December, you see. So don't have to worry about like when you sell, what exactly is the date. It's not important. So when they tell me is the month following the sales, so if I sell in January, the month following January is February. So that's all we're going to do. So there will be a little bit of adjustment that you have to do here, because it's based on 50% cash, 50% is credit. Okay. Overheads expenditure for the month of January and February X4 are 36,000, while in the month of March it would be 40,000, and these would be paid for in the month they are incurred. So the moment you spend the money, you make payment, no credit. Now, sales commission payable to the sales team would be 3% of the sales value. So that will teach you how to calculate your sales commission. Then they say they are payable 1 month after sales. So the commission example, the commission for January, you must take the sales, the January sales, then you multiply with 3%, and then the amount you will only pay in February, because it's 1 month after sales. So January sales, you do know what the sales in January is actually 50,000. I mean, I read it right from the beginning just now. They say the sales for January will be 50, so that means I know the commission is 1,005, but the 1,005 will only be paid in the month of February. Okay, now they tell me the trade debtors for December is 31. Why is there a debtors for December? Because I need to know how much money I'm going to collect in the month of January, because the sales is for 1 month, credit is 1 month. So if I do not know the data, I cannot calculate how much money I'm going to get in January. So this money that the debtor owe you in December, January you're going to collect. So you will be able to collect this money in January X4. Galvani is expected to replace an old machine in the month of March 20X4. The old machine can be disposed for 12,000. You're going to sell it for 12,000. And the new one will cost the company 44,000. So you will have to record payment of 44,000. And then you will also record a receipts of 12,000. So that's the two amount you have to do. So the opening bank balance in January is 12K. Okay, so let's try this, yeah. Now we're gonna do the monthly cash budget. Okay, we're gonna have January, February, March for 2000X4. Okay, all right, January, February, March. Now cash budget is very easy one. You just need to know what are your inflows and what are your outflows. So you put in all the money that comes in, put in all the money that goes out. That's it. So that's what you need to do, the inflow and the outflow. Okay, this inflow can be a little bit not really complicated lah, but you just need a working, because the sales are not everything so direct So what I'm going to do is cash sales 50%, okay, and then your credit sales is the other 50%. You have 1 month. Now if you want to be clear, then what you can do is you could just put in example the value. Now they tell me is 50,000, 66 and 80. So I'm gonna get 50% of the sales of the respective month, right? Okay, 50, made a mistake, okay, so 50, 50, 50, so half. And the other half, right, it's going to be the other 50%. So that's why 25, 25. Then 33, 33. You can see that? So actually this 40,000, the next month, the 40,000 is what going to come. So it become a debtor for you in the month of March. So that's why this amount, where will I get it? Now I will get it from the sales of December. Okay, if I get it from the sales of December, I'll get this amount. But I don't really know the sales of December, but I do know the debtor in December. So that means I have more or less know the figure. It's 31. If this is 31, that means last year December the sales must be 62. Make sense? See, that's why I don't have to give everything to you, but you must be able to use the number and solve the hidden value. It's like a riddle like that. You look at it and say, oh, okay, I need to be able to relate. If my credit sales is half, then this credit sales is last month, then my sales last month must be double. So that's why it becomes 62. Okay, so this is what I get from sales Follow? So the same 40,000 will become the debtor that next month the money going to come back. So it's the same idea of how we got this lah. Okay, now I am told that for outflows, so that's my payment, overheads, expenditure. Okay, if the question gave you clues like depreciation charge or anything, then please remember to take out, because depreciation is not cash flow. So technically they're not supposed to be inside. So if you see anything of that, you removed it. Okay. Alright, so the overhead expenses that will be paid as incurred, so no credit. 36,000 in the month of March, 36,000 in the month of January, February, 36,000. In the month of March, it will become 40. Okay, that's what I've been told lah. Okay, besides that, what else? Now I'm gonna have my sales commission. Now it's gonna be 3% of your sales. But you see, this sales commission has 1 month credit. 1 month credit. So the sales commission for January is 3% of January sales. But you don't pay in January. 3% of the sales you pay in February. So you must take January sales, take 3%, you pay in February. Negative, Now likewise, you must go to February sales, take 3%, you pay in March. So how much then is the commission for January? I need to know the commission. Again, I need to find clue to solve this question. Where will the clue be? Now the clue will be from the debtors. That's why if you cannot solve or you cannot see this, you're going to have problem to even identify how much is the sales and then how much is the commission. So now I can tell you, because I have solved the problem, I know that the sales for December is 62. So I also know that as a result, my commission for December is 1,860, and I will pay in the month of January. So that's all I need to know. Put them in the right column. Okay, pay them in the right column. All right. So what we're gonna do now is to complete off the rest of it. What else that I'm told? Galvani is expected to replace the old machine. So when you replace the old machine, you will get proceeds from disposal of machine. The question say you are going to sell it in the month of March, so that means you are getting 12,000. Okay, but at the same time, purchase of machine will cost you 44,000. Okay, so guys, what we've done is we have actually complete off all the transaction. So we can now do the monthly. Oops, sorry. I just want the 3 months. Okay, what we're gonna do now is we can get the monthly figure. So this is my monthly inflow and my monthly outflow. Now every month when you take your inflow minus the outflow, you're gonna have what we call a surplus, or if negative, then it's called a deficit. So take this, combine with this. Now we have a surplus of 18,000, 20,000, and March we do have a deficit, but still okay. We don't worry about the monthly deficit. We must look at your balance. So your opening balance is quite healthy. You've got 12,000. So your closing balance will be the results of your monthly combined with your opening. Okay, and whatever that you have as your closing, it's going to be the next month opening. So basically that's what we're gonna do. So you're gonna have your February closing become 50,000, the 50,000 become March opening, and then combined with the deficit, the closing balance is actually 49,660. Okay, now what is important when we do a cash budget is we say this is actually a form of control. Now in fact, the very specific word we use in management accounting is a form of feed forward control. We anticipate that there will be a future problem, so we try to do something now so that when the problem occurs, we know how to handle it. So what's the future problem? For example, if you're going to get a future negative cash position, okay, that means you're going to have a closing balance that is budgeted to be negative. That's what we need to worry. Your monthly figure negative is fine because that's only the monthly operation, but important is your cash position, and at the end of the day, do you get a positive figure or a negative figure? So if you get a negative figure, then we really got to ask ourselves how you're going to weather through that problem. So you know, you're going to have measures to raise your cash, which can be short term or long term. It's up to you what's the best way. Now normally short term measures that we have is like whether we can arrange for short term financing. Okay, so like example, if you got any kind of overdraft loan, okay, or trade credit, these are example of things that you can use for short term lah. Now sometimes we can play around with cash flow, like maybe we can try to delay payment to your creditors. So we ask suppliers if it's all right for us to pay you later, or you could speed up your cash collection from your customers. Like example, you can offer, we call cash discount. Okay, a discount that will tell them if you pay up today, we give you 1%, so it become cheaper. So if you think that's attractive, then you pay now. If you think it's worth it, you can pay now. So we speed up our cash collection. So sometimes a company could use measure like that to speed up their cash flow collection. Now at the same time, you can also go for a more permanent solution. Permanent solution means it's like you really need to make sure that the money will always be enough. Now that's long term. Of course, one thing is you have to make sure you must come to a monthly surplus. If your monthly is always deficit, you will never have money one. No matter how much you have, you're going to finish it anyway. So that's why the monthly must be a surplus. So how do you come to a monthly surplus? Of course, then you have to see what's your inflow, what's your outflow. If every month your outflow is more than your inflow, you really have to look at your business already. What's wrong with your business? Now then we could do things like raise capital, equity financing. That's something we can do as a more permanent solution. Or we could go for long-term debt. So when we say long-term, we are talking like example, it could be a 10-year term loan, so that you have a long period of time to pay back, but you get all the money first. So this could be things that we could use to manage our cash flow position, which is very important in business.